This is Mike Swanson of Wall Street Window. What you're looking at right here is a chart of EWU. That is an exchange traded fund that tracks the United Kingdom. If you were to invest in the United Kingdom, this is the fund you'd likely do it with. And as you can see, it had a tremendous decline uh, 2 days ago, and that decline has continued today. I'm doing this on the 27th of September. When you this isn't just a stock. This is an ETF that tracks one of the biggest stock markets in the world, and it's essentially melted down, and that matters. And today, Ray Dalio did a series of tweets about what's happening in England. One of the things that's happened is that the British pound has declined. It's been falling, as you can see from this chart, since the beginning of the year, but it dumped, just like the British stock market, really hard. What's unusual, though, is that the British government announced policies last week that in the past would have made the market go up and perhaps even made the pound go up. Specifically, the new British Prime Minister said that they were going to take action to stimulate the economy. They're going to do the biggest tax cuts since the 1980s. Tax cuts even bigger than what Donald Trump did when he was president. And uh, they also announced that because of the rising energy prices, that they are going to send aid programs to British companies and citizens to help them pay their energy bills too. So extremely stimulative policies that in the past you would think would make the stock market in England go up, but instead it dumped. And Ray Dalio did a series of tweets today about this, basically saying that investors and policymakers need to learn lessons from this. And he says that the panic selling that you're seeing is leading to a plunge in British bonds, British currency, British financial assets due to the recognition that the big supply of debt that have to be sold by the government is much too much for the demand. He continues to say that makes people want to get out of the debt and currency. I can't understand how those who are behind this move did not understand that. It suggests incompetence. Mechanicalistically, the UK government is operating like the government of an emerging country. Now, I'm going to disagree with that statement in a second, but he goes on to say it's producing too much debt in a currency that there is not a big world demand for. I hope but doubt that other policymakers who are doing similar things, spending more money than they're taking in, say they need to sell a lot of debt, will recognize that they're risking a similar outcome and that investors will see this too. Now, what I want to tell you though is I think he's right that these policies, if they are implemented in other countries, will cause a similar negative reaction. The British Bank of England is now having to say this morning that they are likely to raise interest rates by 2 percentage points in order to defend the currency because of this drop that's happened after these policies have been announced. So Ray Dalio is correct in saying that it is causing turmoil in the British financial markets. Now, where I think he is wrong is he's making the statement that that this appears to be an incompetence. He can't understand how these people didn't realize this would happen. Well, I want to tell you that we have seen these type of policies be implemented over and over again for decades uh, in England, in the United States, in Europe, in Japan, throughout the entire world, and they rarely had the type of negative reaction that this is happening, that has happened now. So I would suggest that these people were shocked, and they didn't view themselves as incompetent, but more, I'm sure, they're in total surprise because these same policies worked in the past. Think about 2020 when we saw all the economic shutdowns. What happened? We saw massively stimulative policies that used big debt, big financing in England, in Europe, in the United States, in Japan, in China, in Russia, all over the world. And what happened? Bond markets did not falter. There were no currency collapses except in Turkey, but that was happening before 2020. And in fact, the opposite happened. Stock markets rallied all over the world. In fact, yes, there is a crash in the S&P 500 over 30 some percent in March 2020, like 34%. But once the Federal Reserve took rates to zero, once Donald Trump and the Congress announced new stimulative, massive measures giving people free money, what happened? Markets rallied in the United States. And the same thing happened throughout the world, including England. So what I want to suggest is that something is different now. In the past, these announcements would have worked, would have made markets go up, but they're not doing that now. And that is the key thing you've got to understand and realize what is different. Well, let me show you a chart. That shows you exactly what is different. And that is, this is a chart of the 10-year Treasury bond. Now, as you can see, this is the yield on the 10-year Treasury bond. And what happened, you can see in 2020, it made a new low on this chart. That is actually an all-time low. And that happened when the Fed lowered rates to zero. And the yields up until this year, when we went through the high of 2018, had been slowly trending down since basically 1980. And I don't know how long you have been investing and trading in the financial markets, but I've been doing it since 1998, the period of time I circled on this chart. And during my time, since I started, the yields had been slowly trending down. When the Federal Reserve would raise interest rates in a rate hiking cycle, that cycle would peak out at a level on the 10-year Treasury yield lower than the cycle before it. And that had been the trend up until this year. And that is what is different. So in all the other previous times which there was turmoil in the financial markets of some sort or another, the Fed would lower rates or engage in a quantitative easing operation, an increase in it. And it happened in 2020, but it also happened in 2018. It happened in 2016. And I got an arrow on that period. The stock market fell 20% in correction in 2016. It bottomed. The correction started 2015. The central banks around the entire world announced new stimulative measures. Some countries did measures like you're seeing in England. Everything rallied. In 2012, there is a flash crash. New QE. Everything rallied. In 2008, of course, QE, and things bottomed out in 2009. 2011, there was QE. Interventions happened over and over again throughout the world, and the results would be higher stock market prices and seemingly out of the crisis. The economy, if it was slowing down, the slowdown would end. But now things are different because the yields are going up, and the Fed cannot, and other central banks cannot simply pivot like people are demanding. The government can't simply do a new program like 2020 and make the market go up, make the economy boom, because we're not in that. The entire economic environment that we saw in all these years is over. And that's why when England tried to do what worked before, it failed to work and is actually become counterproductive. When they announce policies that would have worked in the past, they fail, they make the situation worse. Now the Bank of England has to raise rates at a higher rate than they were before. That's going to hurt the economy. The currency is dumped, causing more inflation. So governments, central banks around the world are now in a situation where the stock market in the United States, it's happening everywhere, but because we're in the United States, most likely you are as you're watching this, the stock market's falling. The Fed can't just pivot and make things go back up, because if they try to do that, the dollar can fall. There can be a loss of confidence, as you're seeing in England. So we're trapped. The era of easy money and just QE and bailouts, that seem to work and make things good, it's over. We're now in an era where that system is dying. That's what's happening this year. That's why interest rates keep going up. That's why inflation's exploded, and that's why the stock market is in a slow motion bear market, and just about everything is falling this year so far. This situation will eventually come to an end, and there will be things that benefit from this chaos. But now the air is coming out. The system is dying. And that's what the takeaway you should have from what happened in England is. It's not simply a bad lesson, a mistake that was made, but it were actions that have been commonly made in the past that now no longer will work. And that's what you need to understand is happening, and why it's a significant event that needs to be paid attention to and understood. If you want more analysis like this, hit the like button. Few people in the financial media will give it to you, because the algorithms deliver what the masses want, and the masses don't want this. They want constant stock picks, constant trades. They don't want to hear someone say it's time to step aside until the situation settles. They want picks. They want trades. They want to be told everything's going to go back to the way it was, when it's not going to happen. If you're new to any of my videos on YouTube and you want to get the next one, hit the subscribe button, hit the bell next to it, and YouTube will send you an alert as soon as it's up and for you to watch.